Hello and welcome to another episode of Test, Optimize, and Scale. Excited to have Silicon Prairie here today. Cedric Long, President of Silicon Prairie Capital Partners, as well as Jason Crystal, VP of Business Development. Guys, it's an exciting space. You're playing a huge role in it and have been looking forward to our discussion today.
Thanks for having us.
Excellent. And want to familiarize listeners with yourselves, with the organization a bit. Can you tell us a bit about your stories and the creation of Silicon Prairie?
Do you want to start, Cedric?
Yeah, you bet. With Silicon Prairie, we're actually one of the first funding portals that was developed. Our founder, David Duccini, is really an IT entrepreneur and genius, and he knows how to do things with the internet and software and websites, and created initially a state-based funding portal back in 2016 here in Minnesota, and then later added the national license under regulation crowdfunding, and then later added a broker-dealer unit. I've known David for 20 plus years, and I joined about a year and a half ago to run the broker-dealer because I've been an investment banker in my career. But that's really how we got started, and we've continued to add units. We've got a transfer agent. We're adding an alternative trading system that's in late stage of getting licensed. But in short, that's our story. We've got a family of fintech units to help companies raise capital. And we work with really any industry and just about any stage company.
Excellent. And Jason, how long have you been part of the team?
I joined the team in December of last year, and I founded one of the first mobile-only crowdfunding portals called My Venture. And My Venture started that with my partner, Luigi, who still does UX and product for Silicon Prairie. We were acquired by Silicon Prairie last year, and Luigi and I joined the team. And it's been awesome working with Cedric, who is really modest, but has three decades of investment banking experience, and David and Jade and Ali. So we had a lot of similar long-term visions, and as they say, it's more fun with a friend.
Absolutely, that's the dynamic I see on many of the top teams. And Cedric was going to ask, with such a rich history in business, as a broker dealer, talking about your background in detail there, what brought you over to equity crowdfunding? What was appealing about Reg CF and where this entire vertical is going?
Yeah, no, I love the question. And I've been an investment banker my whole career, which is 30 plus years. I previously headed another institutional broker-dealer securities firm. As I mentioned, I've known David Duccini, our company founder and CEO, for 20 plus years, and we've worked on projects together. What really intrigued me about equity crowdfunding was that it really democratizes capital raising. Being an institutional investment banker, I worked with companies that were somewhat later stage, in a lot of cases somewhat larger. I had companies coming to me all the time that were just a little bit earlier, needed smaller amounts of capital, great deals, and I couldn't help them. And I felt bad about that. I wanted, because they deserved to raise money and have a chance to get going and do something. And, there's venture capital, but we all know that, venture capital, it's a great niche, but it's not for everybody. It doesn't fit a lot of companies. The VCs tell you they only do 1% to 3% of the deals that come their way. So, what about the others? So I knew David, and initially our two firms formed a joint venture to work together where, if I had an earlier stage company, we did it with them as a joint venture. And then when he bought the broker dealer unit, as I mentioned, he offered me the chance to join. So, I left a nice institutional 100-year-old firm to join a, much newer firm, but, with a great group of really smart, entrepreneurial, energetic people. Jason joined us, somewhat later and, furthered that dynamic of people that are energetic, entrepreneurial, want to grow, want to do things, new and different things. But yeah, the Reg CF space, enabling companies to get going, raise some capital, get support from their crowd, and have a chance to make it here in this great United States economy. That's what really excited me. I still do institutional deals, working with later stage companies, but I'm thrilled to see smaller companies, that the VCs don't fund, have a chance to get going. I love that.
Likewise. And you pointed out that 1% to 3% that actually get funded in the VC space. I share a lot of the same perspectives of, getting these issuers, getting these brands the best shot at obtaining that capital, at using those resources to hit their next milestones and take on more market share. And this vehicle as such a strong launch pad to traject over there. And I've seen great ideas, products, teams even lost in the mix in the capital raise process. So definitely understand what you mean when you're pointing at how the excitement, the fulfillment that comes along with Reg CF.
What's really cool about what Silicon Prairie does, and that got us really excited also, is anything from, if it's an idea, they can test the waters. Reg CF obviously goes up to 5 million. But because we're a funding portal and we're a broker dealer, we can do Reg Ds. If someone wants to do a private raise, we can do Reg A pluses. Cedric also does M&A and investment banking. So we really have flexibility that most portals are trying to kind of shoehorn the issuer into whatever their model is. Whereas we really try and listen to the issuer, figure out who are their stakeholders, what are they trying to raise, and match them to the exemption and the strategy that makes sense for them and their business. That's something most portals can't do, and what was really attractive to me and exciting about working with Cedric.
Absolutely. Just to break it down for the audience further, Reg CF can accept accredited or unaccredited investors up to 5 million, Reg A plus up to 75 million as of March 2021. Reg D is accredited investor only, so high net worth audiences. And like you're saying, Jason, the ability to find the appropriate filing to reach the right audiences, what's going to be the best foundation for that organization and their next rounds, their next stages of growth. It's great you're able to do that in a more custom fashion versus just push them towards your core product.
Yeah. And there is a baby, just I didn't want people to think it's weird, like we didn't mention it, but I'm in a bind. I got a co-pilot.
Very cool. I'm guessing it's his first podcast.
It's a she, second podcast, actually.
Glad to hear it's her second podcast. Very nice. Very nice. And, the industry has seen substantial growth, even as I was mentioning 2021 and some of the updates that occurred there. Reg CF also jumped from 1.07 to 5 million. What changes have you guys seen in the ecosystem over the past year and a half?
Yeah, it really broke it open. Those increases in size limits helped significantly. When it was, the size was just over a million, 1,000,007. That's a pretty small deal for a lot of companies. And, moving it up to 5 million, that really opens the market up to, companies that are a little bit later stage, companies that are growing, and frankly, it kind of, starts bumping into the venture space as well, which is good. The more options companies have the better. The market's been growing dramatically year over year. We just see that continuing. We also see it continuing because crowdfunding is becoming more accepted. People used to think, oh, that's, isn't that where you get a prize if you invest or you donate money? And yeah, that's there. But,
it's still one of our challenges. Yeah. Differentiating investment crowdfunding from reward still comes up, but less frequently. I think some of the major innovations, test the waters last year becoming legal. I think that's a big win for founders. When you launch a Reg CF, a lot of people know you need a Form C. You typically might need to work with a securities attorney or a financial accountant, and there are some costs associated with that. And for a lot of companies that just really aren't sure if their audience is going to show up for a deal, the ability to gauge interest prior to launching really helps reduce the upfront costs and mitigate uncertainty. So that opens it up to a lot more people. A lot of people were just, afraid of failure. It's going to look bad if I launch a campaign and it doesn't succeed. A test the waters is a lower friction way to get started. So that got me really excited. And then, just more ATSs. I think, liquidity is, our founder, David Ducini, often says, people have a right to liquidity. And I think that the fact that there's starting to be, and there's going to be more options for liquidity for people investing in this asset class is going to be the next thing that kind of takes it to the next level.
People have a right to liquidity. I love it. Actually, I haven't heard David mention that. I haven't heard the quote yet. I'm going to be pointing to you guys with that. And yeah, the quality of companies, the ability to use test the waters, what opens up as a result with liquidity, like you're mentioning. And I think it's been reflected in the numbers. We look at King's Crowd to see the analytics each week and how much has been raised across each portal, each with each issuer, and all of the activity happening in the space. There have been some fluctuations this year. Do you guys get any questions about public markets and how it impacts public-private markets, or any type of news headlines? We've had questions this year about international affairs, or anything that could potentially have a reflection on the results an issuer's campaign produces. What have you guys seen this year here in 2022, and how do you paint a perspective to direct through those waters with issuers?
Yeah, I have an opinion on that. I'll let you start though, Cedric.
Yeah, everybody's really focused on the economy, public markets, their headlines all the time. Frankly, a lot of the news there is not great lately. We've got inflation, we've got, potential recession on the horizon. And we've got some unfortunate international events. Really what that does, though, I think is, that makes crowdfunding all the better of an option for folks, and probably investors as well as companies looking to raise capital. It's a sector that's much more local in a lot of cases, not as tied to the big picture of what's the stock market doing, and can really come of its own. Venture capital, is actually, venture capital is dropping. This quarter, one of the leading CB Insights, says they're down about 19%, and PitchBook says valuations are down, especially for early and seed deals. If public markets are down, a lot of the venture capital money comes from the big pools of capital, the pension funds, the endowments, and they allocate a percent of their capital every year. And if their value drops in their portfolio due to public markets dropping, that means they have less to allocate to venture. And so for all those reasons, I think that all points to crowdfunding being a solid segment, and potentially even a more attractive or growing segment.
Yeah, I think you need to break it into two parts. There's the issuers and the investors. And from an issuer perspective, other portals I've seen announce, and we're experiencing this as well, an uptick in applications. That is, like Cedric is talking about, a function of traditional forms of capital drying up, or negotiating harder on valuations, things like that. And then on the investor side, that's what issuers want to know is, how's the retail investor or credit investors, how are they viewing alternatives? With inflation, people, I think, are still looking for asset classes where they can get double-digit returns. There aren't that many. Real estate is expensive. The stock market's becoming more attractive, but until the last couple of months, was really high. So startups, private companies that are early, mid stages, they're not correlated the same way to the stock market. So obviously we need more data. We'll know a lot more the more the time goes on, but I think alternatives are going to hold up really, really well.
I'm looking forward to seeing more investor success stories in the years to come. Private equity, of course, 3 to 5 years is aggressive, 5 to 7 more common, 7 to 10 in many cases is when you're anticipating that liquidity event. And there are libraries of issuer success stories at this point, but I believe more investor success stories. It is what will put more of a spotlight on regulation crowdfunding, will take it more mainstream as a whole.
Yeah, for sure. I mean, it's a new industry still, so companies haven't had a lot of time to, a lot of them to really get on their feet and grow and become known. But there are several notable big successes, and there are going to be a lot more. They're in the pipeline right now, and especially when you look at the broader crowdfunding market, which is Reg CF, Reg D, and Reg AA plus. There are a lot of companies there, and yeah, they're going to be success stories, and that'll further enhance the credibility of the sector.
Takes
Absolutely.
10 years for I think it's Samson who says the greatest part of anyone's overnight success is the first 10 years.
Right.
I think it's a Samson quote. But really, investment crowdfunding started really kicking off in like 2016, and took a while to differentiate itself from rewards and donation and all that. So yeah, I think we need there needs to be more time. The other thing that's exciting is investment crowdfunding is not just equity crowdfunding. And one of the most exciting things I've seen over the last few years is you're seeing more portals that are related to different industries, specifically whether it's wine or space. But you're also seeing more types of securities being offered, and opens it up to more types of investors that are have different investment strategies. So that's all been really cool to watch.
For sure. And at
Watch.
Silicon Prairie, we handle all securities. Anything legal that our clients want to do, we'll help facilitate. We do debt, we do equity, we'll do rev share, we'll do safes. Whatever's right for the company and right for their crowd.
Attracting more investors by security type and what they're looking for, as well as vertical specific portals and presentations of offerings, as you're mentioning. And as you highlighted, the credibility. I remember the conversations pre-Reg CF 2015, talking about what Reg CF was going to be, and the first rounds of Reg CF campaigns in 2016, later 2017, and how the overall environment had changed by 2018. Was unsure what was going to happen in 2020 with the pandemic and everything happening in the markets, and was pleasantly surprised to see the growth and the emergence of the retail investors, and looking forward to see what that does over time here. But definitely, you could feel the difference in the listening, the reception from VCs, funds, more of the investment banking world on these type of deals.
For sure. Yeah,
And
you used to hear that VCs didn't like it if there was equity crowdfunding money or equity capital from crowdfunding, and I think that's a lot less true than it maybe ever was, if it ever was at all.
You've actually gotten some leads.
Going forward, I think the VCs are going to want to see companies that had a chance to raise some money, develop some credibility, develop a crowd of supporters, and then make it a few stages further, before they're ready.
The hardest part of a successful startup, the harder part, it's all hard, but the harder part, I think, is distribution, being able to build a community. I think that what we're going to see, and we need more time, but I think what we're going to see is people who can be successful crowdfunding. They know how to market, they know how to get their word out, they know how to have a cohesive message about what do they do, who do they do it for, how do they make money doing it, why should people believe. People who are good at that and can get the word out to the right audience and convert them, I think that those companies have what it takes, and that they're going to be marginally more successful in terms of the failure rate than companies that raise money through other forms of traditional capital to some extent. It's going to take a little bit more time, but I think someone's going to do that analysis. And if I had to put my money on it, I would say successful Reg CF companies are going to be marginally more successful.
If they can sell their securities, they can probably sell a product, and get in the world.
I agree.
And Jason, I know your firm can help do that, and that's great. We recommend you and people like you that can help. But people that can get a message out. That's
crowdfunding takes a crowd.
Takes a crowd.
Absolutely. I like that. If you could sell securities, you could sell a product. It takes a crowd. That really is the entry point on these campaigns in our experience. We could then implement marketing channels, take historical equity crowdfunding investors to these offerings. Your portal's audience then responds even stronger as that momentum, as that traction is visible. So I think those are great things to point out. And we do see the team, the founders, the more active they are, ultimately, as a rule of thumb, the more successful their campaigns can be.
Someone's got to do the work, you know. The whenever people, a lot of times conversations that I'm having on the biz dev side are, people think that there are expenses like making a video, product pictures, that are related to investment crowdfunding, that they view that as the cost of capital of their fundraise. But things like getting your message cohesive, having, making sure that there, a video with the founders in it and explaining what the company does, product pictures, things like that. Like, a lot of times those are table stakes things you need for your website. You need messaging. So, a lot of the costs that people sometimes associate with investment crowdfunding are the costs of building a business. And I think for a lot of founders that might not have those foundational materials, it really helps them accelerate the building of their business, especially in the early stages. And I think savvy founders realize that, so that's one of the more exciting things that I've seen, especially for earlier stage companies. It really helps them hone their message. Start with why and all that stuff. It forces them to figure out that stuff early, which I think is a big benefit.
Absolutely. I've seen the opposite years past, where groups were waiting until they got capital to do those things.
Mhm.
So to be able to have all of that moving well before the round closes, I think even communicates something to the prospective investors of, hey, this is a moving ship. We are hitting our milestones. This is your opportunity to join. We're doing it either way, but this is your time. We're
Yeah.
bringing in investors. Let's hit these goals together.
Yeah. And on the other, when you're raising traditional capital, there's a lot of expenses that people don't take into account. The time that it takes to, reach out to those, 100 angel groups or VCs, that takes time, right? You're having one-on-one meetings, not one to many. So there's all sorts of inefficiency in that process. And when you're not, it's all about building a capital stack. And there's, we don't hate on any form of fundraising, but there are costs associated with that, time costs and other costs. And what I love about investment crowdfunding, and I think what brings a lot of us in, is it's one of the only things that you can do where you can get your word out to the right audience and kind of build your brand, build your community while you're raising money. And I think as a founder, there's very few things where you can do both those things at the same time. There's very few activities where you could do that, and this is one of them. So that's what kind of gets me jazzed about working with founders on this stuff.
I think you said it perfectly there. And as you mentioned, for investment crowdfunding, have to keep mentioning that for classes. I've only seen good things come out of it when it's fully utilized. I've seen groups try to dip their toe in the water, see why it doesn't work in a quick window of time. But if the commitment is there, all of the benefits of having this ambassador group, i.e., a high from a high volume of investors that are now shareholders in the organization, the marketing that comes along with it, the refinement of their entire model has only been associated with strong momentum and achievements in the founder base we've worked with. And wanted to ask, you guys were talking about some of the examples in the industry of success and just how it's become more present. What are some different tips that we can recommend to founders? Particularly, what can they test out? We look at the beginning of any marketing campaign, any growth initiative as a test. What should they be looking to implement so that they see more success on their Reg CF or Reg D or A plus for that matter?
Mhm.
Yeah, you want to start, Cedric?
Yeah, I guess really honing the strategy and the message about the strategy is, number one. They've got to be able to clearly communicate what their company does, how it makes money. We always tell entrepreneurs that, a lot of them are really great at talking about their product. That's awesome. But they have to be able to talk about their company and how the product and the company will make money, because that's what investors care about. So, honing that message. And then, I think all of us have mentioned it several times, but it's so important is the marketing. The marketing is absolutely critical. We tell people they either have to have a crowd or be able to build a crowd, or ideally both, because you need a crowd of supporters. And if you can build that crowd of, overlapping and crossover customers, supporters, investors as the crowd, that reap benefits as long as the company's there. And, having a marketing campaign and an ability to reach people, and then a message that connects. Those are the things we tell people that are absolutely.
Yeah. I think all those things are super critical. Campaigns tend to have a beginning, a middle, and an end. So you really have to have a strategy for the different phases. We mentioned briefly about Test the Waters. One of the reasons I really like it, besides the cost savings, is it allows you to hopefully come out of the gate with some momentum, which I think is important. I was talking to a founder who's getting ready to launch a campaign, and she gave a great analogy because she had done investment crowdfunding successfully in the past and was explaining it to her team. And she said it's like you're having a pool party. You got to order some pizza. There's got to be some beer. There's got to be some people swimming in the pool, so that when people show up to the party, they want to jump in the pool. It's going to be a fun party. I use that a lot now. David has one about a maple tree and sap. That's more technical, but is about the same thing. And so I think having the plan. The other thing that I always tell founders too is your video has to have the team and the founder in it. You're raising money on the internet. If you don't want to put your face on it, it's not good. So is it a requirement? No. But I personally believe and have seen that campaigns where the founder is willing to put their face in it, that's a big deal. We've seen lots of campaigns succeed and fail, as I'm sure you have. I'm curious your opinion on this. Obviously, you have a lot of experience here. What do you think some of the most critical factors are, Jason?
I think it's getting the vibes right at that pool party. That was a good reference there. I use the line around the block versus the empty restaurant, and that type of analogy. I speak to it at length, done so on the show here, so I won't bore the audiences going too deep. But the pool party is perfect in the sense of, hey, there's no one here. What's going on? Or just how
What
everyone's
other people know
perception
that I don't know?
changes. Yeah.
And maybe
Yep.
that'll change, maybe 5 years, 10 years, 15 years from now, maybe it'll be more driven by analytics on aggregation websites and things like that,
Perhaps.
how people are making decisions, or, pension funds are investing in these things and they're just, diversifying across a basket. But it's not like that today. And, you got to have a plan for the beginning, the middle, and the end. If people are asking questions, you got to respond to them. You have to give up the campaign. People want to see, if your campaign's been going on for 6 months, they want to know some stuff is happening every month, that you're moving the business forward, that it's not this stagnant thing. So those are some things that we think about. And as we try and optimize our campaign pages and give people, more options for how they can invest and where and all that, those are some of the things that we think about.
Yeah.
And momentum. You've got to have some momentum. Nobody wants to look at a campaign and there's zero invested and they're going to be the first one. You've got to make it look like you're joining something positive that everybody's liking.
The momentum is investable, is something I say often here. And if you look at the market right now, I find the top campaigns are getting the majority of investors. Not all campaigns are moving. There could be different narratives towards that, but there are funds coming through. It's just gravitating towards those campaigns that have the most momentum, and not just on that first touch point, because it's usually multiple touch points in, often 7 or more. So if every time that investor gets there, there's more people who've joined the pool party, more growth in the maple tree. I don't fully know the science on that one. I'm going to look into it further, but it has that type of moving train feel to it, and we are able to inspire action and create more immediacy as a result. And it could be from the campaign updates, it could be from the third parties and other groups that are speaking about them more. It says
Yeah.
something very strong when there's more activity in a
The,
positive way.
the other thing we talk about a lot when we talk to founders or they're getting ready is, you have to be willing to make the ask. So, if you're not comfortable telling people about your crowdfunding campaign, then crowdfunding not a good fit for you.
Yep.
And I think that as portals are getting older, I think the portals, are doing a better job of identifying what are the traits to be successful, and being real honest with people, pointing them in other directions if they're not a good fit. One of the things that I've started recently is, it's not just about making the ask once. I made a post on Facebook, that's it. It's like any sales process, it takes multiple touches. So you got to meet people first. You need to know who are your potential stakeholders that might invest. Where are they? You want to meet people where they are, and then you've got to touch them, 5, 6, 7, 8 times, which, and with different messages, different, so I think that for a lot of people that might not have a sales and marketing background, that feels very uncomfortable. But I'm sure in the data, I'm sure you've got some type of average number. I don't know if you feel comfortable sharing it, but I'm sure it's greater than one in terms of the average touches.
For sure.
Oh yeah, 7 touch points or more. I like to use a range of 7 to 17. It's like Cedric was mentioning with the plan. And it's like
Yeah.
Cedric was mentioning with the plan, and you wouldn't believe how many founders want to skip those steps or are a month into their campaign. They're now ready to launch marketing channels mentally, and we have to start that discussion there. Who are the target audiences? Where do they go online? What other advertisements, other pieces of content do they see there? How are we going to get mind share as a result? What can we say that'll allow them to stand out and even go further down a funnel and place their funds? And we absolutely have numbers in terms of average click-through rates, average conversion rates, return on advertising spend, return on marketing spend goals, cost of capital that are associated. And then some clients are so focused on the cost of capital, they're okay with missing some of these other steps and even additional investments that may come along with them to launch it properly, to give themselves the best foot out of the door. So that's why we do a lot of this content. We want to get the insights out there. We want to see a higher success rate industry wide and believe that will lead to more mainstream adoption quicker.
Mhm. There are a lot
And
of quality deals out there that ought to get done that don't get done, and usually the reason they don't get done is all about marketing. The ones that do marketing well tend to get done, and I've seen great deals, great products, but they don't know how to market, and it doesn't get done.
I say the same thing about marketing, and that's why working on business plans for years, I got into marketing because it is at the forefront of growth in my perspective for a lot of different brands. It is what gets that awareness. I've also seen great products die where other groups in the industry were not as innovative. So to be able to drive the right audiences to an offering is a big part of what we do. And that's what's behind it. What about when things aren't working? How can a group optimize? What does that conversation look like?
Yeah, that happens. I mean, that happens in a company, that happens in a marketing campaign. The great entrepreneurs are the ones that know how to pivot. And, that can happen with your business plan. If what you're doing isn't quite working, you try something a little different. Definitely can happen with a crowdfunding marketing campaign. And you look at tweaking the message, look at addressing a different audience, you do it, look at testing a couple of different messages, A/B testing. Because yeah, a lot of times what you try first, isn't what works the best. But it's how to pivot, and yeah, it happens all the time, and the good entrepreneurs know how to do it.
I I know it's new and jury's still out. Different portals, different people, marketing agencies have different perspectives on test the waters. I'll tell you why I think it's one of the most important innovations in crowdfunding that, is for companies can test their messaging in a low friction way where it's not very expensive, and they can see if they can build an audience for what they're doing or if they can't before they incur a lot of digital ad spend, which we know is expensive, regulatory form spend, which is expensive. So obviously every company's different. Different companies can raise, for lower cost of capital, some for higher. But let's say the cost of capital is somewhere between 5 and 25%. That could be a lot if you don't raise your max goal. So I think it's testing all the things that Cedric is talking about there, but doing it in the test the waters phase. Once you decrease the likelihood of failure, or you mitigate it, and that there's an audience for what you're doing, then you can come out of the gate with some momentum. You could do on our portal and some others rolling disbursements, so that you can, as long as pledges have been funded, subscription agreements have been signed, some percentage of the campaign funds you can roll into marketing. And so I think that's a big thing is, sometimes things that I think are going to be successful fall on their face, and things that I think are, maybe not, they have a huge audience. And I don't think that the portal, as long as, to Cedric's point before, what they're doing is legal. The owners pass background checks, the Form C is materially complete. I don't think the portal should be deciding, but we obviously, like most portals, we succeed when the issuer succeeds. You succeed when your clients succeed and raise money. And the fact that they can answer some of those questions much, much more cheaply than they could before, I think is a big innovation. I encourage, if you're thinking about doing crowdfunding and you're on the fence, to start there. I've heard some marketing agencies who are really against test the waters. You're adding an extra step in the funnel. I'm curious your thoughts on it, Jason. I know I'm not interviewing you, but I want to know what you think about test the waters.
Sure. It's a podcast. We're back and forth discussion all the way through. I have mixed feelings on it. And I'll tell you what, we've been working on Test the Waters for Reg A Plus since late 2016 at our agency. At that time, we were measuring about 10%, later 30% of the reservations that would move to full investments. There are some private mode setups that then allow from there to take in investments. And when you come out of the gate, you have a much higher level of completed investments. And my mixed feelings are generally, as you're saying, are we asking for multiple conversions? Are we building a better relationship between the audience and the brand, between the investors and the brand? And then when they could complete their actual investment, it's higher probability. I do ask clients about their budget and timelines so I could get a better sense of how to recommend test the waters for them. If their
Yeah.
timelines allow for it, if they can be extended so that we can really pivot if it's not working right out of the gate, like you're saying, let's change around the messaging, let's change around the audiences, let's change around the funnel that we're taking them down. Let's get them to do an email sign up, and then a list of content continues with them as they're getting to the offering page. There's a lot of different ways to use it. So if I were to blanket say, hey, do test the waters, it may not apply for every brand. They have a limited marketing budget. It may be too much of a thing to point at. But like you said, it's a great place to figure things out. Yeah.
One of the best things that I've seen come from it is going back to the recipe for success for one of these is you have to offer the right security for what type of company you are. So one of the best things I've seen come out of it is, hey, this isn't really a company that can become a unicorn. No one wants equity in it. And the feedback that they get during their test the waters is this should really be a debt deal, or vice versa, or something. So on our test the waters, at least, we give issuers the ability to add custom questions, and we encourage them to solicit feedback on their campaign, not just to collect indications of interest. And when you launch your campaign, if you're going to make changes, those could be material changes. People have to opt back in or opt out of their investment. They're getting all these emails. They're confused. Obviously, when you do a test the waters, you need to archive it, and it needs to be included in the Form C. But it's a lot easier to make a change or change the security type or change the minimum or whatever during a test the waters phase than once a campaign is launched. And that's another one of the kind of big advantages is no matter how good a company is, if you're not offering the right type of security or your valuation's totally whack, no amount of marketing, no amount of Jason Frischmans are going to save it. It's kind of like the measure twice, cut once, and if somebody they've done a couple of successful ones of these before, then to your point, I might feel different if they it's not their first time at the rodeo. They already have a community that's warmed up and ready to invest. They just need to tell them about it. You're right. That's different. But for a lot of people, I think it can be really beneficial.
Absolutely. When utilized correctly. And as you're saying, so many great quotes in our discussion here too. Measure twice, cut once. I'm writing all these down.
Jason,
stolen from somebody.
Well, as we start wrapping up here, wanted to ask if there's any examples or tips towards scaling, as well as any final thoughts, any final messages, maybe something we can get to that you want to leave audiences with.
Cedric has raised more money at scale than I have, so I'll kick it over to him.
Yeah, I've raised money. Some of the dollar amounts are big, but those were from institutions and bigger companies. This enables a whole lot more companies to get going. And the comments I'd make about scaling the industry, I guess, would be I see the future as liquidity. We're building an ATS, an alternative trading system that's in late stage of getting regulatory approval. We can do that because we have a broker dealer unit. And, if people have the potential for liquidity, more people are going to get in on the front end. That's what we tell people. More people will get in if they see a way to get out. Not all these companies are going to be IPOs or are going to be bought by a mega corporation. So the ability to trade with fellow shareholders, liquidity. The other thing is credibility. The industry is significantly gaining credibility. That's increasing. That's going to increase all the more as more deals get done, more people hear about it, more companies are successful, more investors are successful with the investments they make. That's how the industry is going to scale.
Everyone has a right to liquidity, and the credibility is coming. Jason, any final thoughts or tips towards scaling?
Yeah, I think Cedric tackled it really well from the crowdfunding perspective. To maybe take a different tack from the issuer perspective in their campaigns. Any type of marketing has to be targeted and specific. So you gotta know who the people are who might invest in your campaign. The messages have to be targeted. I see that's where a lot of people fall down. So that's what I always tell people is you got to figure out who your audience is and with very specific messaging in order to do something scalable, repeatable.
Absolutely. And if anyone wants to get in contact with you guys, continue any of these discussions, get more quotes, what is the best way for them to do so?
Yeah,
I'll go for it. We're on LinkedIn, Cedric Long and Jason Crystal, we're on LinkedIn. We've also got a company website. It's pretty easy to find with Google, Silicon Prairie, Portal and Exchange.
SPHI.io.
Yep. There you go.
And that has all our different services on there. So, and like we were talking about before, we really have, a service for companies that are at a lot of different stages, if you're trying to validate an idea, doing a test the waters, if you're an early stage company or raising up to 5 million, doing a Reg CF, or you want to do something privately. We also use our technology to power private portals for angel groups is something that we're doing more of these days. Cedric does, everything. He's a wizard, and he does, M&A, investment banking for established companies. So, come and talk to us. If we can't help you, we're always really honest and transparent about pointing you in a different direction of someone who might be able to help.
For sure.
angels looking to get portals set up, M&A activity, issuers. Definitely recommend getting conversations with you guys. Again, it's been a wealth of information. Really enjoyed the discussions today. Thank you for taking the time to hop on and speak to listeners. And thank you everyone for tuning in as well.
Yeah. My wife took the baby. I didn't lose it. So that's where
Yeah, Jason, thanks for having us, and thanks for your role in the industry, helping folks, market. So we'll keep recommending you.
My pleasure, Cedric. Thanks, Jason. And we'll see everyone next time.
Thank you.